Today on Rethink Real Estate, our guest is Adam Zach. He is the co-founder and CEO of Home Equity Partner. Now, we speak about rent to buy solutions. Once he takes you through the first little part of the episode, is that it really makes sense from an ownership perspective in helping people go from renters to owners. And sometimes those people can't qualify for that property. So therefore, he has a solution or is a lender/investor where he is going in, he's purchasing the property with that tenant in mind. The philosophy is find the person first, then find the piece of real estate. And again, it's a really interesting concept in all of that. I've actually been hearing a little bit of noise. There was Andreessen Horowitz actually gave $600 million to Adam Newman, who is the WeWork founder, and he is creating a community where the lease to buy option is the primary focus of that. You know, BlackRock bought a portfolio of lease to buy situations for $6 billion that Adam makes reference to. There is definitely some noise in the space, and I think we need to be aware of it if we're in the real estate community and different options yet again. Hopefully it's helpful. Welcome to Rethink Real Estate. My name is Ben Brady, and this is a real estate podcast aimed to deliver sales strategies, marketing tips, and business insights from industry experts and myself to build a listing-focused business for the future. Let's get into it. Adam, welcome to Rethink Real Estate.
Hey, thanks for having me. It's good to be here.
Well, again, fascinated with the idea of what you're doing, but probably to dive into it from the very beginning is, what is your model?
So we partner with real estate agents and loan officers. For people who can't quite get a bank loan, typically real estate agents and loan officers have clients every day, and you'll just tell them, go get a pre-approval letter. And so with the real estate agents, if they can't have those, what we do is we take those leads, we'll buy the home with you, with the real estate agent as the agent. We close on the home, and then that client of yours gets to move in the home on a lease with an option to buy. And so we're doing this across the United States, and we just want to help more people get into homes.
It's such a good opportunity for most people that might struggle getting just your conventional loan or might not have the individual down payment and things along those lines. Adam, I think that the thing that I sort of took away when I was reading up on you before having you on Rethink Real Estate, one of the key parts of that I was like, oh, that's interesting, is find people first, the property second. And if you think about any good business or any business book or any advice that anyone ever gives them, it's like, you know, everything's always people related. You know, find the right people, or you surround yourself by the right people and create success for others. And in turn, you will ultimately be, you know, infinitely successful. That kind of is the model that you're sort of creating within these opportunities. Is that a fair comment?
It is. So as a real estate investor, typically it's location, 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 and then asset, asset, asset. And it's like, oh, then you'll have a good tenant, you'll have a good property. It's all about the equity. And we just noticed that was a very crowded space. It was also really hard to do. There's some truth to it that, yeah, if you buy a property and it works really well. But instead, I just said, you know what, there's 5 million people getting told no, that they can't get a mortgage every single year. There's 50,000 people searching rent to own every month into Google Ads. And I was like, oh, what if I just found that person, paired them up with an individual, or created a company that actually just bought the home and kind of did like a private financing for them? Could that help everyone be a win-win, where it's kind of like this hybrid ownership model, which is, it's not a rental, it's not a mortgage, it's kind of this gray space in Zillow and Redfin and whatnot. You can go for sale or for rent. And so our model and my goal is that there's a button right in the middle, which is creative financing, lease to own, contract for deed, land contract, owner financing. There's a lot of creative spaces to do it, but it all starts with, you got to know two people, and then together they go identify the best asset for them, which we just like a lot more.
How do you find the people? You know, I think that that's one of the big struggles that I always see when, you know, coaching agents within their real estate team, you know, coaching people within businesses, you know, their brokerages and everything along those lines. I think one of the most daunting thing for people is hiring individuals because they're a perfectly good stranger that most of the time going through that vetting process, people don't like doing it to them. This is probably even a bigger and larger commitment than you know, employing someone, really, because I would assume that getting rid of somebody if they're not the right fit, is that easy or hard to do? Like, there's a few things that sort of go through my head from a question perspective, but, you know, I guess that, how do you find the people being the first question?
So, and when you say people, just so I can direct it, is that the real estate agents, the loan officers, or the future homeowners?
The future homeowners.
Sure. So there's Google ads, there's Facebook, and then there's organic word of mouth from realtors and loan officers are probably the top four. So there's a lot of people with digital marketing that people are searching, like I said, rent to own into that. We run some Facebook ads where it's just like, did you know you could get a home without a bank? Turns out that there's trillions of dollars of people that want to put their money to work. Now, if you're going to try to get a 3% return, no investor wants to buy, Adam a home for $500,000 if I'm paying them $2,000 a month in rent. It's just like the numbers don't quite work out. So there's a lot of that, but then there's also people who want to get a home. They go maybe to a loan officer, and because of their debt to income ratio, their credit score or something, it's usually like one of three things. I became a licensed loan originator last year, is like, they don't quite fit it. So then a lot of them, it makes sense just to rent, and that's perfectly fine. And then once you're ready, that's great. There's some people like, I have to move. I don't want to move twice. Like, I know I'm going to be mortgage eligible in 1 to 3 years because I'm self-employed. Maybe they're a real estate agent themselves. We bought, homes for real estate agents because like, I'm crushing it. Oh, but you need 2 years of taxes to support, your income, or you're averaging your 2 years, which is always a little bit tricky. So it can still make sense just to wait. When I became a business owner myself, I was in the same boat. Like, I literally couldn't get a bank loan unless I went, a different style. And so there's just this weird in the middle ground where there's people that, if I'm an investor, I think different than a bank. A bank has to check all the boxes. But Ben, if you were buying someone a home, you might just be like, oh, is it a nice home? Can I trust this person? Are they going to pay me rent? And then from there, we're just trying to flip it on its head a little bit. And so a lot of real estate agents will just send us clients if they're, as opposed to just kind of kicking them down, which I still, makes sense just to keep them in your lead source and follow up with them, because, it truly might just be you hand them off to a good loan officer, and a loan officer can, nurture them, tell them what they need to do to fix their credit score or get their taxes or get their DTI, in the right spot. And you can buy them a home in 6 months. But there's also some that have come to us like, hey, we got a home under contract, and then financing fell through. And it's like, oh, like, what if someone had private money, could go in there, finish the transaction just to ensure that the real estate agent still gets their commission, and then the tenant can still work to get their traditional financing somewhere in the next 3 years. Could be 2 months, could be 3 years. And so that's really where we found the most value add is those type of situations where someone has to move. Of course, we're more expensive than a traditional bank. So if you can get a mortgage, by all means, go that route, because this middle ground is a bit of a premium process. It's just that it fits a very unique skill set. Typically people with high income, high down payments, but for one reason or another, they can't quite get the bank loan. So between the 5 million people that can't get the mortgage, that don't fit it, for the examples, or the people searching in, or the referrals that we get, those are the majority of the home shoppers. And we get probably a couple thousand people a week visiting our website, with 50 to 100 of them raising their hand, hoping that we'll buy them a home. And of course, if the home shopper's expectation is, I want $1 million home and pay nothing, we politely tell them no. But if we say, hey, if you don't want a minimum credit score, or if we don't care about debt to income ratio, like, then an investor's like, okay, let me tell you about like our unique situation. Tell us about it, and let's see if we can't get you that home.
Yeah. So I like it kind of brings a human element into it rather than a tick and flick side of things, because I think that you might be hitting the nail on the head a little bit when it comes to the audience that you're speaking to. Like realtors, for example, they might be have an incredible year and have surplus cash that is ultimately there, that they do look like an incredibly good financial opportunity for somebody, but they just don't fit the metrics of the bank. So that independent contractor person, also it's just people that might have had something go wrong. I know, for example, my mother-in-law had a medical bill that she paid, but then ultimately they then flagged it against her, which then hurt her credit really bad, even though that she had paid it, and she's going through this incredible fight in order to get it removed. But in the meantime, isn't eligible for, to buy a property or anything along those lines. I think that the other part that sort of, certainly intrigues me in the very beginning is that it's funny that we all probably know this, that we have a property management business. And one of the first things, it's probably one of the easiest sales that ever happens for the realtors on the other end that refer us property management business, is that the moment that seller wants to sell, we know that we've got an investor from one of the other properties that will buy it in a heartbeat based on the tenant's payment history that speaks to the character of that person. They will pay significantly above market value because of the steady income that ultimately that's created in the history that is ultimately there. And it's a really easy transaction. So again, it speaks to find the person, then find the property. I guess that with then the acquisition of the property itself, obviously you're charging a little bit more That's how you guys are making your money. But that said, is that what does it look like from a term perspective? How does the buyer eventually become the owner? Like, what does it look like just from the metrics of that?
Sure. So there's typically two ways that people do this. It's a lease with an option to buy, which acts more like a rental than a mortgage, or there's a land contract, which is much closer to a mortgage because it's filed at the county or should be. And so between those two documents, it's literally just a lease, and then you have the exclusive option to buy it, typically in a 1 to 5 year period. There's mega companies that buy hundreds of thousands of homes, like Home Partners of America, Landis, Divvy Homes, that are doing this in the major metros, at least in the United States, where this is their entire business model. Is they're just buying homes for cash and then leasing them back to tenants. And if the tenant doesn't buy them, they're like, fine, I'll just keep it because I like buying properties as investors. Whereas long land contracts get a little bit trickier because it's true like fixed interest. The home buyer is now paying taxes and insurance, and they bear the weight of all of the repairs, the responsibilities of being a homeowner. It's kind of like owner financing, except for the owner isn't taking a first position. And so those can be anywhere from 5 years to 30 years, and there's new rules coming out on what that can look like. So typically one's a little bit of a shorter run, and sometimes is like a test drive. The other one's more of a permanent thing. And then if you're in the rental, it's truly a first time purchase then, where your option fee and maybe rental credits go towards a first purchase, whereas a land contract is called a rate and term refinance. And so knowing which contract that you're getting into can be a little bit nuanced on which one you're going to, but those are probably the two most common types, and right, how the home buyer would get into it.
Now, that said, is there an agreed upon purchase price at the time that they then take it over? Is it appraised value? What is the uptick, so to speak, for them? Because there definitely needs to be some type of guaranteed uptick for you as an investor, you know, if ultimately you're going to the extent of what you're going to in order to help them into a home.
In a perfect world, I feel like this rent to own space would actually be standardized, which is really tricky because the fact that it's so customizable is also a little bit of its downfall. Like, you know what landlord tenant laws are by each city and state, you know, mortgage backed securities, and they have to follow, you know, the Truth in Lending Act and all this. In rent to own, what can you do? It's like, I don't know, whatever you want to put down on paper. So like, I've seen investors buy a home for 200,000 and sell it for 300,000. Or I've seen investors be like, you know what, if you just tack on 4% per year for appreciation, that's all I want as an investor. So you get to buy it at 208, 216, you know, 224, 32. And if it goes above that, you as the homeowner, you know, get some benefit to that. So it's a little bit of hedging your risk, but you're, as an investor, you're also giving away the upside for bringing in, you know, $190,000 to the transaction. So I think there's an unhealthy way of doing it and a healthy way. And that's one of my personal missions, is to legitimize this space where oftentimes investors or sellers or ma and pa's are like, oh, just give me 10 grand or 20 grand and you'll be in the home. Don't worry. And then there's not the contract that backs it up. It doesn't give them the legal authority, you know, to get the money back. And so I think some standardization would help. But in general, it's, what are you paying per month in rent? What's your option fee that you're putting down? Does that get refunded to you if you exercise the option? And if you don't, do you lose all of that money? And then what kind of rent credits can build up? Because a lot of times it can work out really good if you're paying $2,500 a month for 10 years. At the end of that, you have zero equity. Versus in some sort of rent to own situation, let's say you're getting 10% of your monthly payment back. Well, there, you know, you have another, you know, 10 to 15 grand, you know, that you've built up in equity. Hey, that can be a 3.5% down payment to then purchase the home, even if the home has appreciated, you know, in value, if you have some sort of ceiling cap on it. And then, of course, if you really wanted to use it, you could protect yourself from a downside if the market, you know, went the other way.
Going out on a limb here, you may or may not know about this, and I don't know enough about it to actually probably bring it up, but I'm going to do it anyway. Adam Newman, who was the founder of WeWorks, he was creating some real estate play where he was creating a community of people where it was a rent-to-own situation as well. Are you aware of any of that? Because I know that there's been a few major companies that have invested in this space over time to create some formal standardized model, so to speak, where they could do this in a larger scale.
I'm not too familiar with the WeWork. I don't know if they were in the single family space or maybe in the commercial space on some other things. I know the largest players in the single family residence space which would be Home Partners of America, who got bought out by BlackRock for like $6 billion last year. Then it goes Divvy Homes, Landis, Dream America, Zero Down. And then there's some pockets in individual ones where it's more of that rent to own model. Otherwise, it's just ma and pa shops around just listing their house for sale. So if I'm missing one on the WeWork, I would have been out of the loop a little bit. But on the single family residence side, those are probably the top performers as far as investors go, or private companies trying to go about this model.
And I guess maybe this is the wrong thing, is that I've heard of this. Absolutely, I've heard of it, but it really is not something that you hear a lot about. Why is that?
I think people know and like the standard of, I'm either renting and I have to pay rent, and I maybe change a light bulb and pay my utilities. Other than that, like, I don't really care. Versus I'm a homeowner and I really want all of that responsibility. And I also want to be on title, and I just want to pay a fixed interest rate. And of course, there's still taxes and insurance and interest rates and, a 30-page document that you still sign. I think going in the middle, it's too hard for people to understand. It's too complex. When you go to sign a brand new home and you see 50 pages of documents that the mortgage company makes you sign, I know almost zero people that read all that, but they trust the system enough, and that the federal government, who's subsidizing a lot of these and backing these, basically has their back, which in a lot of cases they do. On the rental agreement, cities and state statutes are protecting you from making sure the landlord can't do anything. Well, now you're in this middle ground when you're like, oh, who's doing repairs and maintenance? Like, well, it depends on what's in the contract. Okay, well, is my down payment refundable? Well, it depends on what's in the contract. Like, I think investors are trying to get the highest return for the lowest risk. And the tenants are equally in intention of being like, well, I want the nicest home, the most control with the least amount of down payment. And so it's like, oh, it's this good, healthy tension, between the two, but you got to kind of balance what that looks like.
Can I ask a question from both sides of the fence? So let's put our buyer hat on for a moment and look at this. If there's somebody out there that's not with your company that's obviously trying to do the right thing by people, what is something that they should be cautious about if they're looking to go into something like this? And then after we discuss this, I'd like to talk about the investor side of things, that if you're an investor going into this, how do you make sure you're not taken for granted on that side as well as the buyer side? So if I'm a buyer, I'm looking at this at the moment, what are the things that I need to be conscious and cautious about?
Number one is, are you on title or not? You can cloud title at your local county. And that's a big deal, because otherwise it's kind of like a purchase and sale agreement where you could go through court and you could have litigation, but there's nothing filed on county that says, hey, you've either filed the option agreement or you have equitable interest in the property with a land contract. So knowing which one of those that you're in, like in North Carolina and Texas, you're supposed to file the option agreement. But in general, I'm guessing 90% of these never get filed at the county. So then it's basically just like an agreement. Hey, I'm going to do this. Hey, I'm not going to do that. So I would say that was question number one. Number two is, who are you doing this with? If it's just someone who's done this for the first time, that's one thing. But if you have a local real estate attorney reviewing it, or you have a national company that's like doing hundreds or thousands of these, you can guarantee that the pages and the documents that you're signing is very long, which also, favors and protects them a little bit, but that's a little bit of a legitimate, experience. The biggest red flags for me are, just give me $10,000 and you can get in the home. Like, no screening, no nothing, like, just give me 10 grand. Right. And then sign this piece of paper, which, there was some, recent legislation that was trying to go after that, whether it was in the Hispanic community, whether it was in specific states or low economic. It was people trying to do these on foreclosed homes and be like, yep, you're the homeowner. Here you go, 10 grand. And by the way, fix up the home and do everything. So there's been some lawsuits against those type of individuals. So it's like making sure you get a home inspection, making sure that you've locked in your purchase price. Does the rent count towards it? I actually did a whole year-long, or about a 2-year-long podcast, all trying to help what I call tenant buyers or home buyers, which is, here's the 5 scams to look out for. Here's, when you should do lease to own. Here's when you shouldn't. And so putting all of that content together and then writing some articles on it, I feel like the investors probably have the advantage, because he who has the capital makes the rules. So I was trying to start off with, hey, tenants who typically, maybe are less in of a position to negotiate, these are the things that I should watch out for, where you would just walk away and be like, that doesn't make sense to me.
Yeah, I think tempering yourself in those moments is an important part of that if you're a buyer, but also an agent that's trying to pull a deal together. You need to look at it from an angle of that, don't just do anything to get the deal closed, and don't do anything just to get yourself into that position, because it could be something that you regret later on. It's very difficult to temper those emotions at that point in time though. However, going across to the investor side of things, I know that certainly I've seen it before where investors, even though they have the capital, they are taken advantage of, because at the end of the day, they see it as a good opportunity, but also maybe it could be their own fault that they're trying to keep it arm's length and say, hey, this is just an easy deal, let's just do the deal. What are some things that from an investor perspective, if they were going to do this, that they should be cautious of?
Sure. So we've done about 100 of these, and I've bought in, maybe 30 to 50 myself, and me and my business partner. We've also connected party A to party C a lot. And now we have a fund where we're actually buying lots of homes for people. And so on the individual side, a lot of people are like, oh yeah, they'll buy the home, won't they? Like if they put down $10,000, they're for sure going to buy the home. Like there's no way that they're going to walk away. Well, if it's on a $600,000 house, them walking away from 10 grand turns out, isn't that big of a deal. Now, if you got 10% down, that's a very different thing, because now you as the investor buying this asset, well, if something were to go wrong. And so that's where, we screen individuals pretty robustly as a landlord and as a mortgage loan company, at least for our company, because we want to know, are they evicted? Do they have collections? Do they have bankruptcy? So even though it's people first, property second, because the investor is essentially giving the tenant a rent to own pre-approval letter. They're like, hey, just go pick a house for $600,000. And as long as you're willing to pay $5,500 a month in rent, like that's a good enough investment for me, because I'll make X amount cash on cash ROI. And so knowing that as you get the home under contract, if you're intending to rent that out to someone, well, if your end tenant decides at the last second, as I'm sure no real estate agent has had this happen before, but like, oh, people change their mind. Oh, it turns out I don't want to sell. Turns out I don't want to buy. Turns out, I'm not going to do the capital. So you're adding in that layer of complexity that as an investor, we've seen this where they're buying a home for a tenant, and at the last second, the tenant says, hey, just kidding, I don't want to actually, rent in that home, and they walk out. So then knowing, okay, what does your purchase and sale agreement happen? What happens to earnest money, option fee, legalities on whether or not you have to close. So making sure that you have special language in that purchase and sale agreement on the forehand is just some lessons learned that we've known about. But that's otherwise, it's kind of an adjusted return to your risk. So I'm always for disproportionate risk to reward. If I'm bringing $500,000 either cash or with financing, into it, I want to know, what would this compare to just investing in the stocks or getting a 5% CD? And so for most of the investors that we're looking at, they want something higher than a double-digit return backed by real estate. And so if they can do that, and the tenant can handpick their home with a real estate agent that they like, and there's some sort of, cap on the appreciation, there's some equity play into there. And then hopefully if interest rates go down, their home property, goes up higher. And then once they refinance, their monthly payment goes lower. That's where we've gotten about a 55-star reviews, is when that transaction actually goes all the way through. And then life is better for both parties, where the investor made some money, maybe above what they could have done, and they had some real estate to offset it. And then the homeowner eventually gets their home as well.
What do you think the future of this space is? Like, I know that's a broad, probably vague question. Where do you guys take it? What do you see for your business, in the long-term perspective? I know that it's probably just one deal at a time and build. Is it an acquisition that goes to another larger company? Because there's probably a portion of this that depends on the people leading the cause, that the intention of the cause stays correct or stays good, because a big company could come in and sort of change their theory on a few different things, or use their power or use their influence to not sort of honor certain things within an agreement, correct?
Yeah, that's true. So I think it's going to start on the government side, like most things do. There might be some cities or states that are more proactive, like Texas and North Carolina are a little bit more proactive in this manner. Minnesota's passing some legislation that says, hey, you have to file all these agreements, and you can or can't do certain things, because I think it's just been too long. It's been the wild, wild west, and it's really hard to enforce, because there's not like you have to be a registered mortgage loan originator. It's individuals and investors. And so without infringing on everyone's freedom to be able to act into a mutually exclusive, agreement, there has to then be legislators that pass something. And because real estate, besides lending money, isn't regulated, but it's all regulated on the local level. So now it's like, okay, well, what's California going to do? What's Texas? What's North Carolina? What's North Dakota? All going to do? And then it's just like, okay, following suit until someone just says, oh, here's the standard for this. And that's, I guess, one thing that over the next 20 or 30 years, if I can help pioneer and standardize that, that would feel like Adam has uniquely served his audience and who I can uniquely help. Because I think same thing on the mortgage side on what they've done, same thing on the rental side. There's, different city or states, but if there's this middle ground where it really does make sense to have this shared equity, ownership model, I would love to see more renters turn into homeowners, and I would like investors to be able to still secure their returns backed by real estate.
So I guess that as we sort of round out our time together, Adam, where do people learn a little bit more about, what you're talking about? Is there resources that you provide as a company? Is there stuff that you've done in the past? You mentioned a podcast episode. What are some of the resources that people could sort of learn a little bit more about this side of the business on?
Sure. The general hub is homeequitypartner.com. So there's two E's into that. And from there, you can get links to all of our podcasts. We wrote a guide on the rent to own, both from the investor and the selling side of things. And then you can always find me on LinkedIn if you want to just have a conversation of, hey, how does this exactly work? Or I have a listing, I want to add creative financing onto it just to, help the home sell, which we've actually done a few times where new construction or builders are like, hey, I have this home that's been sitting. If you can fill it with a candidate that actually wants to move into it, I would take X amount in rent. Can you just find that person, screen them, and fill the property? So those would be the ways that we are helping and ways people have reached out.
We'll make sure that all the links that you mentioned are in the show notes below for the episode itself. But just as we sort of round out, last question from me, you seem like a very informed person when it comes to the real estate market, some legislation, things that are particular to your industry. Is there any, podcasts, emails, websites, places that you keep yourself informed with the real estate market or books that you've read on this theory or things like that you could share with the audience if they wanted to dive deeper into it and go through that education process that you have?
I would say one of my favorites is Core Logic. So they have, all kinds of, whether it's state specific, if it's industry trends, and of course no one can, make the projection, but just looking at like, okay, over the last 12 months, there was a 3.9% appreciation across the board of the United States of homes. And they're projecting another, 3% for, where there's just data mining a lot. And I know that everyone's probably local market's going to have, better data. But since I'm buying in, 20 to 30 states, I'm trying to figure out, okay, how is Minnesota doing? Okay, Texas going through a correction. Here's Florida. Where's, the best place to buy, and doing some other things. But otherwise, the Gary Keller series have always been, pretty good and true to my heart. Whether it's the one thing, whether it's the Millionaire Real Estate Investor, I know he wrote the book for the, for the agents, and so just that mindset of going through the different stages and focusing on, even though this might sound like a shiny ball, to 80% of the audience, this is a no, right? Like, oh, it might sound great. And if there's this one situation where I can help you make another 10 or 20 grand, great, play that. But I'm assuming most real estate agents are like, nope, I want pre-qualified buyers and I want high-end homes and I want listings. And they go through their list. But if this is just another tool in their tool belt where they can stay more informed, they can maybe help educate a client, which then turns into a sale and turns them more knowledgeable. I think that's the benefit of agents that are on this path to mastery, where they understand not just buying, selling, all the creative ways and the ways things have done it. And so if you want to add this to your tool belt, and I hope it can serve you in the future.
Wonderful. Well, Adam, thank you so much for your time and joining us on Rethink Real Estate, a very interesting concept that certainly has got us thinking. There's no question about it.
Thank you for your time. It's been great.
So about 75% of our audience hasn't liked, followed, or subscribed to our podcast. It would mean the world to us, and it would help this podcast more than you know to expand our reach if you were to like, follow, or subscribe on any of the platforms that you're watching or listening on. Thanks again.